Hello, everyone. Over the weekend, I was explaining how after 6 red days in the stock market in a row, the seventh day tends to be green. And today was that green day. So in today's video, I'm going to explain what the next steps are for the market. We're also going to take a look at how well my trading view indicator also did with today's price action. All right, so without further ado, let's get started with the video. All right, so this is my indicator on a 3-minute time frame on the SPY for today. What do you want at this point? It doesn't work perfectly. You can see that there was a short signal here, clearly didn't work, but then right after that, we got a long signal. The majority of the time, it's working really well. And at the end of the day, guys, this trades better. It doesn't have any sort of emotion behind it. It doesn't have any bias behind it. This is pure math. So regardless of what you think or what you feel during that time, that's one of the major reasons why trading doesn't go well. It's because we involve human emotion into it. But with this thing, consistently, it does really well. And the majority of traders out there currently in the market are not profitable. So it's doing consistently better than the vast majority of people living. So it works. Over here it didn't, but every other time that we're seeing, it clearly works. Just looking at this on a 15-minute time frame is it's kind of ridiculous. You can see that we got a short signal in the morning, and then we got a long, and then it just shorted and we dropped. So larger time frames, there's not as many signals, but it is the most accurate on a 15-minute time frame. It's the most accurate, obviously, because there's not as many signals. But using this to gauge direction on which direction momentum is a game changer. And that's something that I don't think many people, I don't think people truly understand how good it is to have like a tool that allows you to understand which direction the market is going to go. Based off of math and statistics and just math. So the proof is in the pudding, man. If you want access to this bot, you can click the link in my bio. So here's the chart of the SPY. I'm still in the camp of us falling a bit lower. So these blue bars, what I simply did was I took the October 2022 lows in the market and I overlaid it on this chart. And I'm still in the camp that we do, regardless of how much we bounce, it's sort of irrelevant. In my opinion, I do think that we should be falling below 490 and heading into 480 territory. There's not enough fear in the eyes of bulls, and bulls are very, very content with buying this dip. So there needs to be more fear. There needs to be a bit more anxiety that bulls feel. And bears are not yet rude enough, in my opinion. So when bears become more rude and just audacious with how they speak, and when bulls start wanting to flip their bias, those two things are going to lead to a bottom. And we haven't gotten there yet. Bulls are still very content with being long. Bulls are not starting to switch into being bearish. Does that make sense? If you're a bull right now, you're good. You're comfortable. But being a bull down here, this is where bulls are going to start changing their bias. And this is where bears are going to be very, very happy and more evil. They're going to be more audacious. And they're going to talk a lot of trash. So those two things combined is going to lead to a major bounce. We have not gotten there just yet, in my opinion. And but overall, obviously we had a bounce. So what I do want to look at is I want to look at the large tech stocks to see what the next steps would be in the market and what the driving components for the market currently are going to be. So what I want to quickly look at is how beaten down are these large tech stocks, and do they have more room to fall lower? If these large tech stocks have more room to fall lower, very simply, the overall market is also going to have more room to fall lower. So starting off with Apple. Apple is holding support at 163, 164 area. That's a major support level. Below that, we have 160. Clearly, right now, this is bearish momentum. Okay. We might get a bounce back to 168. But overall, this is just weak. And unless we get a close back above 168, Apple should be headed lower. To around 160, 161. So there is technically more room to fall lower on Apple, but as we get down here, the risk reward for being short is non-existent. So just keep that in mind. It doesn't make sense to be bearish down here on Apple, in my opinion. But there is technically a bit more room to fall lower, okay? I'm just going to make this quick. So Microsoft, clearly this is very, very overextended to the downside in terms of the Bollinger Band. When you're trading this many days outside of the Bollinger Band and we get an open and close outside of the lower level, generally, it's going to chop around most likely, but this is the start of a bottom. Again, right? Same concept. All of these large tech stocks are creating bear flags, essentially. Most of them. We could have small bounces, but what happens after the bounce is going to be dependent on how many buyers come into the market. But overall, Microsoft looks primed for a bit of a bounce. Tesla also very, very overextended to the downside. Same concept as Microsoft, but with 5 days in a row where we opened and closed outside of the lower bands, this is not like the biggest stock that you want to really, really aggressively long, because it's purely going to be dependent on whether buyers step in. But the fact that Tesla is very, very overextended to the downside means that there isn't that much room to fall lower. We do have earnings, so a lot of that can, change, but technically, this is not really the time to start going short on Tesla, in my opinion. Google, for example, is holding really well. Google is one of the stronger names. Meta is also holding this level of 480 support really well. So it's trying its best, right? Netflix is also really overextended to the downside and it's holding this prior level of support at 543. So a lot of these large tech stocks, Amazon also, is bottoming out a bit. A lot of these large tech stocks are creating bear flags. Most likely, what I do think ends up happening is we should get bounces in all of these stocks. That would lead to the S&P getting a bounce to the S&P getting a bounce to around 503, 504, and then we should most likely continue falling lower. I do not want to be bullish, and I do not want to be a buyer into strength. Do not go long into strength. Go long at levels of support into weakness, because these bounces can be fake. These can be completely fake bull traps, and you don't want to be caught in a bull trap. So I hope this makes sense. I hope you guys enjoyed today's video. Please comment down below what you think is going to end up happening. Just be cognizant of how you are as well. If you start becoming very aggressive to anyone that says anything contrary to your beliefs, usually that's a sign of a bottom. So just a sign of a reversal as well. So just be cognizant of that. I hope you guys have a wonderful rest of your day. Take care. Have a good one. Love you guys.